Hey, so in this video, I'm going to be answering the question, what in the world are leasehold improvements? I know this is a very exciting topic, so I'm going to walk through kind of what leasehold improvements are, how they might be used in a business, and more specifically, a lot of times when you're starting a business and you're going to be making renovations on a space that you're renting, that would be called leasehold improvements. And you often have to put these in a set of financial projections that you might be trying to get a loan from a bank or from an investor. They want to see where the leasehold improvements are. And you need to, one, know what that actually means and how it should be entered into your financial projections. And so that's what I'm going to show you. Before I dive into that, just a little bit of background. My name is Adam Huxema. I'm the co-founder of ProjectionHub. And we help small businesses create financial projections for investors and lenders. And we've been doing this for over a decade. We have a number of different financial projection templates. I'm going to be using our coffee shop projection template here just to demonstrate leasehold improvements, how it works, and kind of see how that flows through the financial statement. So with that, I'm going to go ahead and jump in here to this template. I will put a link in the description of the video below to our different templates. So if you are working on a set of projections for your business, you can go grab the most relevant template there. All right, let's dive in. So I am on this input assumptions tab, and if you're being asked to create a set of projections, you might need to come up with, maybe a 5-year income statement summary that would look something like this, right? And the question is, where do the renovations or the leasehold improvements that you're doing, where do they need to show up in this report? To clarify again, leasehold improvements, what that actually means is if you are leasing a space from a building owner and you are doing renovations on that space and you're paying for it. You're leasing the space, but you're paying for the renovations on somebody else's building. You might think that, hey, that's just an expense that I need to put in the first month of my projections as renovation expense. That would make sense, but it would be wrong. So where you want to put that in, it's actually a fixed asset, which is a little bit strange, but it is an asset that you get to utilize over the life of the lease. And so it will be amortized. So another kind of buzzword here, it'll be amortized, which is similar to depreciation. It will kind of be used up. The value of it will be used up over the life of the lease. So we're going to say, hey, we're opening this coffee shop here and we've got leasehold improvements. We've got it set as a category. It's a building improvement category. We're going to spend $60,000 on renovations. So we'll put that $60,000 value there. And then it asks life expectancy in years. And so this is to help us determine how to amortize this expense over the course of the lease. And so what we need to know here is how long the lease is. So if you have a 1-year lease, you actually need to put 1 year in here, and it is going to, that full $60,000 is going to be expensed in that first year. If you have a 7-year lease, you'd want to put 7 years. Basically, you want to amortize this leasehold improvement over the life of the lease. That's when you get to utilize it. And so let me just show you, again, on the income statement summary here, we have this line here, depreciation and amortization. So this is where that expense is going to end up showing up. And so right now we've got equipment, furniture, and glassware. These are all going to be depreciated as well. So I'm going to actually remove these just so we can see this a little bit, see how this operates a little bit more. Okay, so if I come back here, now we'll see, okay, depreciation and amortization, but the only thing we're amortizing right here is the leasehold improvements. I removed everything else. So $8,571 a year. We can just check our math here, but it should be 8,000. So we say 8,571 times 7 for 7 years. That is, roughly rounds up to 60,000. So it is amortizing over the life of the lease. Now, just to show you, if we were to say this should be 1 year, life expectancy is 1 year, and we come back to this, we'll see that now the full 60,000 is all expensed in the first year. Now, there's one more thing to consider here that's a little bit maybe confusing and kind of an accounting specialty thing here, but there's a difference between when something shows up on the income statement as an expense and when the cash leaves your bank account. And so what we'll see here is that, when you pay the contractor the $60,000 for the leasehold improvements, for the renovations, that cash is out of your bank account, right? So it's a cash outflow of $60,000. But because we're amortizing that expense over the life of the lease on the income statement, it doesn't count as an expense until it is amortized. We can look at this in another example here. So if I change this back to, let's change it back to 7 years. So when we, again, we're back to that $8,571 a year. Now, if we look at the cash flow summary, though, In the cash flow summary, we'll see cash paid for fixed assets. There it is, the 60,000. So negative 60,000, that's a cash outflow. That's out the door, but you're all in that first year. But we can see that again, the expense only shows up spread out over the life of the lease. So kind of a confusing concept. We get a lot of questions about that and how to fill that in. This is our input other operating expense tab. You may be tempted to enter in renovation here. So you could put in building expense and you might say 60,000. And let's say that was just for 1 month. So you might be tempted to do it this way. And although from a cash flow perspective, it would be the exact same. You would have cash of 60,000 out the door in that first month, regardless of whether you add it as a fixed asset or as an expense. But technically, what you want to be doing here is those leasehold improvements should be added as a fixed asset and amortized over the life of the lease. So hope that's been helpful. If you have questions, you can reach out to us at support@projectionhub.com, or you can leave a comment in the comment section of the video below, and we'd be happy to try to help. All right, thanks.